Hey traders, this is Christian from Tribeca Trade Group with your end of day recap for Thursday. So, pretty ugly day across the board for global equities. Nvidia just came out with earnings, and it's just more of the same. A real nice beat by a tech company. Second quarter revenues 2.23 versus estimated 1.96 billion, and their EPS also stellar. But hey, this is the story that has been happening all earnings quarter. A name that comes out and they have great earnings, but they ran too much into the quarter. So I did not play Nvidia at all. I was, I'm not going to say I'm not going to say hindsight because I know some of you listening to this video didn't hear me talk in the trading room, but this name ran from $100 to 164, so 64% since the last quarter. It's just a little bit too much. So I don't my philosophy is I don't really like to short companies that I think are quality that I like. So, I would have played a put spread here, considering this has been the same pattern of almost, well, not almost, I'd say 90% of the tech earnings for names that have had a decent run up have acted this way after earnings. They just, can't go up. They don't have enough momentum. They've already made the move into earnings. So we've seen this. This is the story I would say of this quarter for earnings. Strong results, but too much of a move up into earnings. It kind of makes you think, what would they have needed to do for the stock to go higher? Um, you know, Beating up by almost 30 cents on the revenue side and beating by almost 20 cents on the EP. I mean, what would they have really needed to do? 40 cents would maybe bring the stock higher? I don't know. But it just shows you that the move has been priced in to the stock. So that being said, we've had this kind of overhang for a little while of this malaise where good results, but prices aren't moving. And it took a little bit of bad news. It took some volatility to kind of bring us down. So the main story of the day is, I mean, there's a lot of stories of the day, but the VIX moved up to a 16 handle. So we were just at about a 10 just the other day, a 10. And so a 60% increase in VIX. And this is how it works for the VIX. The VIX, there'll be these short term bursts of volatility. You hope it's a short term, like one of these, rather than this. But we'll see. This is all headline driven. It's also a little bit of a self-fulfilling prophecy. I think everybody started to say, "Hey, we're overdue for a pullback. We're overdue. 3 to 5% down is probably what we should get." So the more of that chatter that people kind of say, "Oh yeah," it seems like it's going to happen. The one thing, so whenever this happens, when we get this volatility in the morning, and I said this yesterday morning, kind of repeating the same thing, but I start to look: are people buying the dip, or are they still buying puts? And I'll tell you, the first couple hours, I was alarmed a bit because they just kept buying puts. They kept buying them in all the FANG stocks, a lot of weekly stuff, but a lot of also a couple months out in most of the FANG stocks. Apple, Facebook, Netflix. We didn't really see much put buying in Amazon and Google, but a lot of momentum names, a lot of put buying in. That and the other thing that's new is, especially on a sell-off. Now we've been seeing different put buying in things like EWY, EWJ, AAXJ, which is Asia ex Japan. But they've been kind of here and there. There was a really the order that I'm referring to in AAXJ was, I think, last Tuesday. Really, somebody pretty savvy coming in here and buying the December 75 puts and selling the 75 calls. So they went out further. They gave themselves time. This trade was on a week, more than a week before it started to work for them. But in addition, what we saw today was a lot of puts in. Besides these couple, the couple orders that we saw, and EWY and EWJ, we saw today a lot of put buying in India. This is kind of a crash protection order, another 3 points down. But the December puts what caught my eye earlier. So that's one of the India ETFs. Another one is EPI. We saw a lot of put buying in this one as well. So they went after a lot of things that have been the best performers of the year. India's market, you go to EPI, and they're going after some of the biggest performers. So this came down pretty quickly, breaking to the 50-day moving average today. So they loaded up on these. They also bought more EWJ. I saw some FXI puts. I saw some EEM puts. So going after a lot of the emerging markets and going after a lot of the momentum. So we did see a mix of call buying a little bit as the day wore on, but it was startling to see how much puts were bought. So which tells me it could take more than a day. This may be more than a day of a little bit of pressure. We have tomorrow's Friday. I don't know if people are really going to be buying the dip tomorrow on Friday. We'll see. It's also the 15th of the month, which sometimes you can see regardless of what's going on now, but you could see a kind of reallocation of portfolios that sometimes happens on the 1st of the month and the 15th of the month. So I would watch out for that. Some technicals to watch. Really, IWM, which we talked about yesterday, down to the 200-day moving average. So IWM often leads the move in the U.S. indices. They seem to move before anything else. And IWM broke the 50-day moving average before any of them, while the Dow was making new highs. So and just made a 52-week high. So these things happen pretty quickly. Just on 725, we made a new 52-week high. So all the way down to the 200-day moving average. Let's see if that holds. Besides that, that's IWM, S&P. S&P is still in value for the month. So if you look at S&P futures, 2428.5 is your support. If you look at SPY, there's going to be a similar level. 243.10 is your level of support. So it looks to me like a pretty good false breakout that happened the other day. NASDAQ or the Qs. Qs have a little bit further to go before we hit support. 139.23 is the bottom of value. So that's what I would be watching in a couple of the indices. As normal, you look at the worst performers of the day. Biotech always seems to get hit really hard. So kind of looking like a breakdown in biotech. Watch this dotted line, which is a previous breakout zone. That may come in here for some support, but if we trade below that, then I would say this big VPOC is something to watch. And then finally, if you're trading, intraday or day trading, the main thing to watch right now as a day trader is the VIX. When the VIX starts to pull back, we saw this a little bit till the latest Trump interview, and we were coming in pretty hard, and it looks like things were going to get a bounce. And then we saw more talk of heightened tensions with the same thing, North Korea. So that's it. So we may have some more volatility in the short term. But keep in mind, this is all politically charged. This is, I think an excuse to sell off. I think if you're focused on the long term, this is a dip to possibly buy. I think if IWM holds a 200-day moving average, would be a nice sign, and it would be a nice dip to buy. All right, so that's it for today. Have a great night, everybody, and I'll see you back tomorrow morning.